In this video, we'll address 3 trends for the future of securities lending. Securities lending has traditionally been the domain of institutional investors who make their securities available for loan. Retail investors have been involved indirectly in securities lending through the large pools of assets that have been accumulated in mutual funds, ETFs, UCITS, and other fund structures. In fact, this group makes up the largest single group of investors that make their securities available for loan. In recent years, though, we've seen retail investors enter the lending market directly thanks to new product offerings from their stockbrokers. Firms like Charles Schwab and Robinhood provide clients with the opportunity to earn extra income by lending their fully paid-for securities. We expect the rise of retail lenders to continue and expand across the globe. The second trend we want to highlight is peer-to-peer lending. That's where institutional investors, typically referred to as beneficial owners in securities lending jargon, lend and borrow securities between themselves without the use of traditional bank intermediaries. Now, some institutional investors have always been engaged as direct participants in securities lending, but peer-to-peer takes it to another level. Their borrowing counterparties are other beneficial owners. Not all transactions require bank intermediaries, and it makes sense that sophisticated institutions recapture some of the frictional fees that are lost in these transactions. We've recently seen the launch announcement of the Global Peer Financing Association, which brings these beneficial owners together to support trading and educational exchange, and there's been a quick increase in the membership beyond the founding firms. In our opinion, this will have an increasing influence in the years to come, not just for borrowers and lenders, but also the vendors that service them. The third trend that's worth identifying is the use of distributed ledger technology, DLT, or often referred to as blockchain. When it was first bandied about in the industry, there was an expectation that it would have an impact on trading. Well, while some transactions are certainly being done, statistically, it's tiny. But what is gathering momentum, and we expect to have an important impact in the near future, is the use of DLT to address the administrative issues that surround and some would say plague the business. The common domain model and document digitization are 2 examples where we expect DLT to make a substantial difference to the efficiency and risk management of the business. This will no doubt throw up challenges, and there will be fits and starts, but digitization makes too much sense for it not to have an impact. In summary then, 3 of the trends that we see as having growing influence on the development of the business are the global spread of participation of retail investors in securities lending programs, increasing activity in the peer-to-peer space, and distributed ledger technology applications in the administration of securities finance. These are 3 trends that we see as important and impactful. Tell us what you think, and which other trends do you expect to shape the future of the business?